Hey guys, Sean here. When you print money long enough, you eventually devalue your currency no matter what. We already know the United States is suffering from 8.5% inflation thanks to the Fed dramatically increasing its balance sheet and expanding the money supply. But this isn't an isolated case, and Japan is now facing record inflation after decades of quantitative easing since the 1990s. Now, this might sound terrifying as we visualize a tsunami of money washing over Japan, but inflation isn't raging as a direct result of this extra cash, but it is the confidence in their currency, the Japanese yen, that is falling in value. And this is the reason why the inflation monster is coming for Japan, and they might not be able to stop it in time. And in this video, we will discuss the less talked about effects of money printing, and that is currency exchange risk. And this currency risk can hurt just as much as traditional inflation, where there are too many dollars chasing too few goods. There is a legit reason why Japan is printing money, and it's not the same as the United States. Japan is in a very fragile economic state where their economy is stagnating, they have an aging population, and they have suffered 3 lost decades, right? That's 30 years of poor growth where the rest of the world has progressed financially, but Japan's stock market has hardly moved. We can see this obvious difference when we compare the S&P 500 to the Nikkei stock index. Plus, salaries in Japan have hardly changed for decades, right? And this isn't good news. So while the cost of goods in America is increasing, prices in Japan have more or less stayed the same, and in some categories they've actually fallen as well. Now you might think that this is a utopia, right? That is fine, my salary can stay the same, but prices are also stable. But there are two big problems with that, right? Firstly, Japan imports a lot of natural resources from overseas, right? Japan is a manufacturing giant, but it doesn't have enough oil, food, and metals on its own. They have to buy them from other countries. And remember, the rest of the world has progressed, but not Japan, so prices of key goods like food have increased as well. However, salaries have not. So people in Japan have to pay more. Plus, deflation, which means falling prices, really does pose a risk. After all, what's the point of buying this bottle of water for $1 today when it will cost 80 cents a year down the road? I'd rather save my money and not just spend it. And this could mean companies won't be able to grow, wages won't rise, and layoffs could happen as well. Now, this is very unlike the United States, where everything is about consumption and growth. And to combat this, the Japanese central bank has been lowering rates, right? They have lowered interest rates to zero and have even gone negative as well. Now, you might think this will work. After all, if you leave your money in the bank and your deposits earn nothing or even lose money, you'll be rather silly not to withdraw your cash to spend, right? However, this is where culture plays a big part, and the Japanese are fundamentally different from people like the Americans. Now, Japanese people love to save money, and the country has one of the highest savings rate of 30%. And I'm not kidding when I say they simply withdraw their cash and stuff it under the mattress if interest rates go low enough. Plus, negative rates don't automatically guarantee more productive spending, right? And this is what the Bank of Japan is trying to accomplish by doing yield curve control to jack up interest rates. Now, yield curve control sounds complicated, but it's really simple. Japan wants to fix their interest rates to as low as possible by buying bonds until they hit that rate. So in other words, they are printing money to keep interest rates at 0%. And they have just announced to the world they are going to buy an unlimited amount of bonds, right? Unlimited amount of bonds to hit their goal. Now, Japan has been doing a lot of radical things to keep its economy afloat. That even includes the Bank of Japan buying $400 billion worth of domestic Japanese stocks to prop up their stock market, making them the biggest single investor in the Japanese stock market, right? And this unlimited money printing is their latest Yu-Gi-Oh card they are going to play. Now, has this money printing been working? Yes, the CPI has increased to around 0.8%, a 2-year high, but it's still far away from the 2% inflation target, right? Notice how 2% seems to be the magical number somehow for central banks. But anyways, it's because of this unlimited bond buying that Japan might have just unleashed the inflation Godzilla on Tokyo. Now, here's the interesting thing. Money printing doesn't always lead to soaring inflation. Now, I know it's crazy, and in this chart compiled by Lynn Alden, we can see why, right? Like, unlike the United States, Japan's newly created money isn't really circulating in the country. It is still base money sitting in the banks, and they have not entered the broad money supply yet. Now, banks are still not aggressively loaning money thanks to their conservative culture, and Japan hasn't injected stimulus into the system yet. And this means running deficits and injecting stimulus checks into people's personal bank accounts. But this bond buying is causing one big side effect that is causing Japanese prices, especially when it comes to food and fuel, to go up. And that is the depreciating yen. Now, the Japanese yen has fallen to 130 per US dollar, and this is causing havoc to the local Japanese people when it comes to their imports. Remember that Japan is very resource poor, and to manufacture stuff and to create things that they need and to eat, they need to buy raw materials from other countries, right? And this is what happens when other countries are tightening and raising interest rates, while Japan is still keeping theirs near zero. Basically, countries and investors are all seeing this yen being printed and they are now valuing the yen less. And when Japan announced their unlimited bond buying, this just smashed the yen into the ground. Right now, the Bank of Japan is fighting a battle with the bond sellers because they can print unlimited money, and when you can print unlimited money, eventually you will win. However, at what cost? The more they buy bonds to keep yields low, the more money is created, the less confidence investors have in the yen, and that means likely more depreciation. And this is the big problem that the Bank of Japan is encountering. They are caught between the rock and a hard place. But what does this mean for us? But wait, I just left this part out, right? So it seems that Japan has announced economic stimulus for low-income households. Now, I know this is good. You need to help people to survive, but they're going to inject money directly into the economy. So this just means they're going to expand the money supply even more. And at the end of the day, right, this doesn't really bode well. It could also set a very bad precedence for continuous economic stimulus into the system. So what does this mean for you and me? Firstly, if you're looking to buy Japanese goods like a Nintendo Switch, this might be a good time. Basically, a weaker Japanese currency means holders of the dollar can buy more stuff. But for the economy at large, this is a disaster. Remember that the yen is a world reserve currency, so other countries might want to devalue their own currency to stay competitive, and this could cause inflation all over again. Plus, for the local Japanese, this could trigger a rush to assets like gold and silver to protect their purchasing power. Back in 2016, when the yen dropped to around 120 against the dollar, Japanese investors bought gold just in case the yen was to depreciate even further, right? And right now, the same thing could happen in Japan if enough damage is done. And this is the thing that we rarely factor in when we are buying gold, and that is currency risk. For example, right now, the yen has fallen by 10% to the US dollar, and because gold is priced in US dollars, suddenly if you're in Japan and you only have the yen, you have to pay around 10% or more on top of the already rising gold price. When something like gold is priced in US dollars, you must first swap your currency for dollars, then you can buy gold. And this is a double whammy that we must all watch out for. The thing about money printing is that it affects different countries differently. In the United States, it will be direct inflation, but overseas, it could lead to currency depreciation, also causing a kind of inflation if you import a lot of commodities and goods back home. And this is why we should watch what our central bank does and consistently buy gold to guard against currency risk. For example, Singapore's central bank is tightening monetary policy, so the Singapore dollar will gain against the US dollar, and this means buying gold for me will be cheaper and it's a good time to grab a few ounces. But for another country, it could be different, and buying more gold could be more expensive as well. So this is why I personally dollar cost average my gold purchases every month and quarter. You can't time the market, and you also won't know if a currency devaluation could happen in your home country down the road. And this is why I love gold, right? It's because it's a neutral asset, guys. It stores value, and regardless of whether my home currency strengthens or depreciates, my purchasing power is safely stored away. So if you are un-American and while your currency is still stable or strong, you might want to start stacking more. Terrible currency devaluations can happen like in Turkey and Russia through no fault of our own. Turkey lowered interest rates even though inflation was rising, and the sanctions on Russia caused the ruble to initially collapse. And as the average Joe, we can't do much except prepare while we can. So Japan's case is one interesting situation that we shouldn't forget. Printing money long term rarely leads to anything good, and it's very easy to lose control and unleash the inflation monster. Doesn't matter if you're in the West or in the East, we won't know what the Bank of Japan will do. Maybe they'll raise interest rates if the yen devalues too much and inflation starts to soar, or maybe they will just ignore it and continue to print more money. Whatever the case, it's important we take action while we still can, and that means getting into hard assets that can't be devalued. That's why I'm stacking gold and silver when I can. And if you're new to gold and silver, be sure to check out this video and learn how to get started. So let me know what you think, guys. Do you believe the Bank of Japan will reverse course and raise rates in time? Or is crazy inflation going to visit Japan very soon? Let me know in the comments below. And if you enjoyed today's video, be sure to smash the like button and subscribe for more gold, silver, and finance videos. Thank you all for watching, and I'll see you soon.